What do I mean by the crash has started? Well, let's go over this because this affects you and my life because we're here in the world. And number one, we're here in America. And the things that have been happening, with all due respect, I always have to say this, many people aren't aware. Really, the majority of people around you. Great day, another day, another opportunity. Super excited. Oh my gosh, where there's life, there's hope. I'm so excited to be here with you this evening, this morning, this afternoon. I'm not sure where you're seeing this information, but I want to welcome you to A Rich Education YouTube channel. Let's take this information to the next level and let's dive right into it because I don't want to belittle the time. The crash has started. So what do I mean by the crash has started? Well, let's go over this because this affects you and my life because we're here in the world. And number one, we're here in America. And the things that have been happening, with all due respect, I always have to say this, many people aren't aware. Really, the majority of people around you, maybe 0.1% of people are conscious about what's going on with the economy, what's going on globally. They feel it, they see it, they're hearing it. Social media is big. You're scrolling, you see some things happening, but fear, complacency keeps people back from growing more mentally so they can understand how the financial world works. But we're going to keep it, and I'm going to do my best to simplify what's taking place so you can make decisions within yourself because life is what we make it based on the information we receive and also the information that we rejected and, talking to myself, self-discipline. Will the stock market crash in 2025? 8 risk factors. I'm not going to read all these articles. You'll see in the description below. And remember to like, share, and also subscribe to the channel if you haven't done so already, because I want to continue to inform you as the future is upon us. And like I stated, and I always state, the future is now. So I'm not going to read all of this, but just want to brief us. You can go below in the description and get these articles. But let's touch base on this, all right? Wall Street analysts say that one way or another, the technology bubble bursts. And we've had several major calamities within, but we've never been here within in time. You know, maybe you've had that teacher that educated you on things dealing with economy, economics, financial education, but the dot-com crash, okay, dating back to the late 90s, early 2000, this was major. All right, we had a lot of companies and a lot of things that were taking place back then, but when we look at things now, but the technology bubble burst and the deep seek news gave sector investors a reason to shed portfolio shares. Now, once again, I'm not going to go deep into that, but there's one thing I want to click on here that is a derivative from this article, which is stubborn inflation. I want to read this. Stay with me. I know you're not attracted to money. You want it, you got to get it because you got to pay the bills, but the attraction to money and the discipline within self can take things to the next level, especially today when the economy is crashing. There's so much opportunity, but it's education that's the answer, and you won't get it in the traditional way. The U.S. economy is solid right now, and I'm reading this article here, stubborn inflation, okay? With GDP, gross domestic product growth at 3.1% and an unemployment rate of 4.1%, but in economics, this looks can be deceiving. The biggest issue is inflation, okay, because that's where we really are. This crash, and I'm going to talk about it. I'm going to simplify it at the end of this. Stay with me, hang out with me. Let's get some financial literacy today, all right? I'm going to show you what this is all about and how you can win in it and how you can protect yourself. That's if you want to, right? The biggest issue is inflation. Like I mentioned, running high at 2.9%, which will delay rate cuts along with uncertainty about how the oncoming trade wars will play out, says Alejandro Zambrano, chief marketing strategist at Think Markets in London. Moreover, remember, we're in a global economy, all right? And the U.S. dollar has been the main force in that, but things aren't the same anymore with the U.S. Moreover, deportation threats, which have already hit the agriculture sector, further increase the risk of higher U.S. inflation. So you're going to the store, see prices hiking, just all of a sudden, because I'm also in the market studying trading, studying future contracts, and letting you know it's not looking too cool. So the ripple effect and the derivative of things like this are affected with the things that you and I need as consumers. All right, higher food, land, things of that nature, soil, all these things. Look, respect that truck driver, man. Don't get mad you on the road. These people bring us goods and services, but their rates are going to go up. So let's get the education so we can win. Now, let's talk about this. It's been a brutal start of the year for the bond market. Stocks, bonds, ETFs, mutual funds, all these things. We're somewhat involved in them. Really, a lot of people are, but they have no breaks in what they're dealing with. They have no knowledge in what they're dealing with. Okay? Because your portfolio is in the hands of Wall Street. So let's brief this real quick because you're involved in this. If you're working a job, especially if you've been working for years, you've been putting towards a retirement. So you're involved in this stuff. Just imagine you're getting ready to retire and pew, we got a big crash. I'm not trying to scare you. I'm just bringing knowledge to you. But if you're not thirsty for wealth creation, if you're not thirsty to protect yourself, then this information is of no avoid for you. The U.S. bond market has been free fall start to 2025. Let's talk about that. Just brief on it real quick. The U.S. bond market is off to a tough start in 2025. This has been reflected in spiking yields, which trade inverse to the bond. Stay with me, guys. I know you're not attracted to these words. I'm learning. Don't run away. Don't scroll. Stay right here with me. All right. Price bonds on Friday. U.S. Treasury yields surged to their highest level since October 2023, inching closer to key threshold that has historically triggered a sell-off in stocks. Okay, think about that. You have stocks in your 401k, whatever investment for the future. I want you to think about these things. Are you in control of it? All right, are you in control? Friday's surge came after a blowout December jobs market, which showed 256 jobs were added to the economy last month compared to economists' estimate of 155,000 jobs. Now, what kind of jobs? Okay, we got government, all right? But if we're talking about small sector jobs, okay, and please comment below, correct me. These jobs aren't going to allow you. It's going to be a struggle even to make a living. Soaring debt, all right? Working for this, high taxes, even though I've been hearing the president speak about cutting off taxes, but still, you got to understand the fate of this country. Those things I'm going to save you for what's coming on, right? You want that, though, right? While things are still moving, business is still going on, you want lower taxes, but you got to get the education on this, right? But the job reports was just the latest catalyst responding for pushing yields higher, in addition to speculation that the economy still hot after 2 years of rate hikes from the Federal Reserve. Investors are also concerned that Donald Trump's proposed policies will stoke a rebound in inflation. Such a situation could then in turn potentially necessitate further rate increases. All right, so what is a rate increase? I simplified this. You got the knowledge here. We're living in the information age. So what did I do? I asked ChatGPT to simplify this for the people so they can get a little better understanding of rate cuts and hikes. What is an interest rate cut? When a central bank like the Federal Reserve in the U.S. lowers rates, this is called an interest rate cut. Think of interest rates as the cost of borrowing money. When the rates are cut, loans become cheaper. This means lower payments for car loans, mortgages, and credit cards. More people borrow and spend, which can help boost the economy. Saving accounts earn less interest, okay? So keeping money in the bank may not grow your savings as quickly, right? Why would the central banks do this? To help the economy grow when it's weak, such as during a recession or after a major crisis. So we hear this word a lot: rate cuts, interest rates, hike on rates. We hear these things. All right, we are in a recession, great people. You can't keep doing these things, and we're going to go deeper into this, but you can't keep doing this, ladies and gentlemen. I'm going to talk about what I mean. You just can't keep, as a country, history. When you have a better outlook on the past, you have a greater outlook on the future. And the future is now. So you can't keep doing what America has been doing since the creation. Really, we weren't the first people to start printing money, but just look at the fate of anyone who's debased currency. And debasement means mixing another type of substance with real money. We'll talk about that, all right? What is a rate hike increase? A rate hike is when the central banks raises interest rates. When rates go up, borrowing becomes more expensive. Loans, payments or mortgages, loans, credit cards can increase. People borrow less, spend less, all right? So it's just the opposite, which helps cool down an overheated economy. Savings accounts earn more interest, which is good if you're saving cash in the bank. I don't call that money. It's just a medium of exchange. Why would the central bank raise rates? Usually to slow down. Don't go nowhere. I got to keep saying that because I know, but I'm letting you know. You're getting a little bit of financial education, enough that can help you make moves. I know you got some questions after that, right? And prevent the economy from overheating. How this affects you and I. Loan mortgages, rate cuts, cheaper loans, lower monthly payments, rate hikes, more expensive loans, higher monthly payments. Okay, sounds good, sounds bad, right? Right? Savings accounts, rate cuts, lower interest rates on your savings, rate hikes, higher interest rates on your savings. But then inflation chews all that up. Job and spending, rate cuts can create jobs and increase business activity. Rate hikes can lead businesses to slow down hiring or even lay off workers. My last video, okay, you got to check it out, right? Well, we talked about that. So check out my last video last week if you didn't get a chance, where I go a little bit more in depth into what's going on in the job market, right? Just briefing it. I don't want to bore you, but I want to educate you, right? Simple takeaway. If rates are cut, borrowing gets cheaper, savings earn less, and the economy speeds up. If rates are hiked, borrowing gets more expensive, saving earns more, and the economy slows down to control inflation. All right. So ladies and gentlemen, boys and girls, this is information that we got to get moving forward in the new economy. The frozen housing market shows few signs of thawing as 2025 begins. So this is important. I want you to check this out.
It's just getting started, and if you have plans to move or maybe buy a house in 2025, we got some important things you need to know.
We're still trying to get used to saying 2025.
It's hard.
NBC senior business correspondent Christine Romans is here with all of the details. All right, Christine, lay out the landscape for us. Where are we in the housing market right now?
So right now at the end of December in 2024, kind of a deep freeze in mortgage applications, and that usually happens in December. It's the holidays. People kind of just put that home buying on a shelf. But we saw in November, pending home sales actually picked up for 4 months in a row. So you were starting to see some signs of life in what has been a pretty frozen real estate market. So super interesting, home sales picking up just a little bit here. Housing market experts essentially telling us people who are buying a home have said, we're recalibrating. We're not going to wait for lower mortgage rates. Yeah. We have to move for school or for a job, and so we're going to move.
All right, so where are they going? Like, where are the markets?
The South saw home sales pick up in November by about 5%. So you look at that, we're talking about Florida, we're talking about Texas, the Carolinas, even Tennessee. The Midwest up a little bit. But look at the Northeast, home sales down in the Northeast. And the experts telling us that the reason why the South was seeing those big gains is because of the availability of homes and the availability of jobs. And so that was why you saw a pickup there in the South.
Any sense about where we could be headed in terms of mortgage rates coming down? I know, not like you can predict.
I know.
She can.
Thank you. Well, no, they're back above 7% to end the year. So that could keep a deep freeze on for maybe the month of January. But it's so interesting to me, the reason why rates are still so high, a couple of reasons in the market. One, looking at this new administration, the bond market is telling us it could be inflationary. Some of the plans of the Trump administration. So rates are staying high here in the bond market. And also because the Fed has signaled that it's not going to be aggressively lowering interest rates this year. So do I think rates will be lower at the end of next year? I'm going to say yes. I'm going to go out on a limb and say rates will be lower at the end of this year. But how much lower? If you're waiting to buy a home, waiting to refinance, you might have to just pull the trigger at 7% mortgage rates or the high sixes, because that's where we are right now.
We're not coming back down to 4 anytime soon.
It doesn't feel like we're coming back down to 4 anytime soon. And a lot of people have a mortgage at 3.5%, and they're stuck in their house. If they don't have to move, they're not moving because they don't want to pick up a mortgage at 7%. So,
thank you, Christine.
Nice
Happy
to
New
see you.
Year.
So we have options, great people. You know, I'm not into real estate, but my community and the professionals we're working with most definitely are the educators there. They're doing that, educating people on making the best decision. When I heard like the big boys, some of the billionaires, and, you know, Buffett and all these other guys, they don't have homes, they rent because I guess they travel and things. Just make the right decisions. I'm not here. That was just a quick 2-minute briefing. I'm not going to go into this article, but make the right decisions. I mean, for the high paid middle class person, they're going to get their homes. These are their dreams. So a lot of their income is leaving them, from the mortgage to that beautiful luxury car to the credit cards that furnish the home. And you know, so you got decisions to make them wisely. But things we can't ignore inflation, because inflation will just push everything. If the dollar, when it's going to happen, there's no currency. Dollar's just the longest, what's the tallest standing midget in the room. If that made sense. But I've just heard so many scenarios when it comes to the dollar. But when you study, there's been 2,000 plus currencies that have been created in time in the past, and they've all went to zero. So this is what inflation is all about, understanding that. Gold and silver prices plummet as U.S. Fed signals only 2 rate cuts in 2025. So what does this mean? Many people, all right, look in the description. Remember to like, share, subscribe. But remember, in my description, I have plenty of information for you, okay? And you have a book there in my description. It's on Amazon, my book. You can get that book that's going to educate you, under 100 pages. Readers are leaders. My people perish for the lack of knowledge. Come on, man. But I kept it simple. Written by me, pictures, historical events, dates, people that I know, getting to know that are in my community, other communities that have given their testimonies on the power of having these precious metals in their hands. So I'm not going to go into this, all right? But when you see these type of assets plummet, okay, when you see that, it's on sale. These are assets. Your home, your house is not an asset. It's a liability. It's the bank's asset because you pay the mortgage. Money's leaving you unless you turn that home. Okay, you got an apple tree growing in the back. You got some sheep in the back. Now your home is becoming an asset. You're renting the basement. You're renting the rooms. Now your home is an asset. Other than that, it's a liability. These are assets that you can hold on. And why? Well, it's all manipulated. Right? But when gold prices go up, that's something you don't want, because this is your only hedge. Well, one of them, I feel the most important in an inflationary environment. Inflation is going to push these assets up. So you want to hold on to things that actually build when inflation. This is how the rich get richer, because of assets like this. All right. So I won't go into this article, but you can check out this video here. All right. And this video here will allow you to get more knowledge on the importance of physical gold, physical silver. And also you can go to Amazon, link in description below, to get the book. All right. So as we come to a close on this wonderful video, great people, why are cryptocurrencies crashing? So all these assets, remember, Bitcoin was once a penny. And man, what's that guy? I think, oh man, Da Vinci. I think he's on. He got a big channel on YouTube. But I'll actually have his information where you can just go to his channel. But he's a billionaire, and he was basically one of the first adapters. I think he got Bitcoin at penny or dollar, somewhere around that. So just imagine, Bitcoin will hit 1 million. Should hit 250,000 this year. So why are cryptocurrencies crashing? Trump tariffs spook the markets. All right. So just brief on this real quick. Cryptocurrency markets suffered a sharp decline after President Donald Trump announced new tariffs on major U.S. trading partners on Saturday, triggering widespread economic concerns. On Monday, Bitcoin fell to a 3-week low of 91,441, Economic Times reported, and while Ethereum dropped to its lowest level since September. The downturn was driven by fears of inflation, economic instability, and potential regulatory measures from Canada, Mexico, and China. So another opportunity, great people, when people see the opportunity, those who have the education, when blood in the streets, there's opportunity, right? So this is an opportunity for you to get pieces of a Bitcoin. If you are that person who has the capital, because just the other day she had moved up to about 100 and something. Now she's back down below 100K. And with that being said, it's opportunity to go get pieces of a Bitcoin, pieces of Ethereum. If you got the capital, get a whole Ethereum, get a whole Bitcoin. Not financial advice, but financial education. Visit my description below, and you'll see where you can get your $5 course on cryptocurrency. Super simple, educational, fun videos. You'll have fun learning about this market if you don't know of it already. All right. So with that being said, what I want to do is I want to share with you, because we are in a crash. These are the factors and the ingredients that are building this up. We're in an inflationary crash we're going into. Okay. I want to read this. You got to get all this. I hope you haven't left. I hope you're hanging out with me. Okay. This is going to give you the blueprint on how to get started, and I also have some information below where you can have the professionals educating you while you bring everything that you spend back home, and you can grow assets, learn how to protect them, and ask a lot of questions. Understanding an inflationary crash, what it means, and how to prepare. All you have to do in today's time, go to ChatGPT or whatever other search engine that's going to give you good information. You just got to know how to ask the question. An inflationary crash happens when the cost of living skyrockets, but the value of money drops at the same time. In simple terms, prices for everything, food, gas, rent, daily essentials keep going up, but people's money buys less and less. Your currency buys less and less. I was talking to some youth the other day. Shout out to brother Frank Muhammad, working with the youth in the community, and we were talking about currency and the purpose of cash, the Federal Reserve note, and I shared with them how $20 once upon a time filled up 2 grocery carts. Just imagine that, and the food was a little bit more healthier. You know, we weren't fully GMO to my knowledge, right? Why is this happening in 2025? Excessive money printing. Governments printed a massive amount of money during crises like the pandemic to stimulate the economy. Now, too much currency, I like to supplement the word money because it's not money. Money is something of value. The dollar has lost value. That's why it costs more to use it. Money is in circulation, reducing its value. So this is important, ladies and gentlemen. Debt overload. The national and global debt levels are unsustainable. As interest rates rise, the burden of repaying this debt becomes unbearable. So we're talking about global debt. Other currencies around the world have crashed. They're becoming worthless. They are worthless. I always speak of the most recent situation that we've had, which I think was in 2016. Please correct me if I'm wrong, but this was Venezuela, the Bolivar, you could be a billionaire there. Those billions will only maybe get you an egg and a chicken. So that won't happen here in America, Demi. Okay, maybe it won't, but there's no currency. Why wouldn't it happen? Okay, so this is the main thing that we're going into, which we are going into. You have all those talks of interest rates and mortgage rates going down, interest rate hikes, and all this talk. Okay, gold and silver. I mean, all these things, mortgages, land, stocks. But at the end of the day, inflation is the key thing. This is what's happening, great people. Excessive money printing, governments printing a massive amount of money during the crisis, like I mentioned. Debt overload and national global debt levels are unsustainable as interest rates rise. The burden of repaying this debt becomes unbearable. Supply chain issues, the lingering efforts of war, natural disasters, all these things we see happening have been happening, but now they're escalating. And trade tensions have disrupted the flow of goods, making prices rise even faster. How does this hurt the majority? How does this hurt you and I? Put your information below, meaning your comment. Let us know if you know, all right? Crushing lower living costs, rent, utilities, groceries become unaffordable for many. All right? This is happening now. I was driving my daughter off at the daycare, wonderful lady. Shout out to Miss Snyder, been in business for 30-some years in Temple Hills, Maryland. Really grateful to have good people. And I just saw this long line of cars. I didn't want to assume, but I had an idea. I'm talking about long, waiting to get food. And the crazy part, with all due respect to the people, that the food is fake and it's free. So it's a lot of instability going on. And this is where the discipline along with knowledge has to take place so we can make moves. We gotta make moves fast. It's tough, ladies and gentlemen, but it can be done. Where there's a will, there's a way. With it, another day, another opportunity. That's why I always open up my videos with that. Savings destroyed. Money saved in regular bank accounts loses purchasing power quickly. What 1,000 could buy last year won't buy half as much during an inflationary crash. Right? Job losses. Everything I'm talking about, you see it happening. Job loss. Companies often cut costs by laying off workers when the economy slows. Increased debt. People will take on more loans to survive, getting trapped in debt they can never repay. Ladies and gentlemen, boys and girls, the majority, especially those living paycheck to paycheck, suffer the most because they lack the financial assets that protect wealth. This is why we talk about gold and silver. This is why we talk about the opportunity of cryptocurrency. Remember, $5 course below where you can get more knowledge on that and have fun learning. But decentralization is what crypto is in. It's on the blockchain where the US dollar is centralized, controlled by central banks and the elites. Best financial protection for the wealthy and smart thinkers. And I know you are a smart thinker, right? I knew that. Hard assets. Precious metals, gold and silver have been trusted for centuries to preserve wealth when currencies collapse. And I was just having a great conversation. Shout out to Talitha. She was actually, I had the blessing of interviewing her on my podcast last year. And you know, she called me. I'm not an advisor, but it was just an honor to have a woman. Congratulations on what you're doing in the African diaspora. She's been just going up the ladder ever since I met her, just climbing up, doing great things. But I speak about this because we had a conversation about, you know, what she's looking to do. She's gaining knowledge on what to do, dealing with her 401k, dealing with other assets she understands the fate of the dollar and anything tied to it. So shout out to her again with great conversation, just leading her to more knowledge so she can be in control. And why did I bring this up? Because see, precious metals in your possession allows you to preserve your wealth when currencies collapse. And this is what an inflationary environment is. Real estate, land, properties typically hold or increase in value during inflation, especially rental properties. You got to go up on the rent. People got to pay it. That's an asset. You see what I mean? Commodity investments in resources like oil, energy, agriculture, since their value rises with inflation. Okay? We need oil for everything. Everything around us is dealing with oil. Okay? To make, you know, particular things, you need oil. Oil is all around us. Bitcoin and decentralized assets, like I mentioned, cryptocurrency, especially Bitcoin, are seen as a hedge against inflation because they are decentralized and limited in supply. The US dollar is not. I mean, they're funding all of these wars. They're printing cash, right? Bailing out other people when things happen, okay? So you're printing more cash with nothing backing it other than being a bully, okay? Well, we know, I save that for another time. So these are assets that protect you. Income-producing businesses. This is why in an inflationary environment, the business owner, the one who has a service that's valuable for the marketplace, or has the product that the people need, this is income producing. Cash flow is coming in. The intelligent business owner, he knows what to do with the cash flow. He's great. He has good advisors. He has his bookkeepers, all those things. So invest in businesses like that, provide essential goods and services people will always need, like food productions, healthcare, real financial education. Foreign currencies diversify into stronger, more stable currencies outside the U.S. All right, and this is AI, ChatGPT. It's my good friend of mine. This is dropping his knowledge. Private equity and hard to access investments. Wealthy individuals invest in hedge funds, private businesses, alternative markets that aren't impacted the same way as public stocks. 401k, mutual fund, bonds, pensions. They're not involved in these things. And you can do the same thing. It's not money that makes money. Believe me, it's information that makes money. So with that being said, once again, it's information that makes money. It's not anything other than that. So if you are the person who cares, if you are the person who wants to gain more knowledge, if you are the person who wants to protect what they've been working hard for, if you are the person who likes community, if you are the person who likes mentorship, okay, if you are the person who wants assets, who wants to lower taxes or get rid of them, who wants to protect themselves and understand the importance of cash flow, trust, understand the importance of land, precious metals, getting these assets, understand the importance of communication, and understand the importance of being a servant. And you want to know more of these things, all right? Because we're right here. The crash is now. Visit, comment. It's a pinned comment in the description below, and you'll see a free video for you to watch. Just taking your information to the next level where you can have a platform that will really put you in the best position you could be in right now, all right, in the new economy and in this crash that we're experiencing now. Most don't know. They feel it. They just don't understand it. They don't even know what's going on. That's the scariest thing about the times that we're living in. So great people, it's been an amazing few minutes with you. I hope you hung out with me. Please like, share, subscribe, leave a comment. Let me know what's on your mind. Let me know what you're thinking about. Remember, where there's life, there's hope. You are breathing. God is not through with you, ladies and gentlemen, boys and girls, brothers and sisters, because you got another day, another opportunity. Take heed, stay safe, and remember, continue to grow in information, because information and knowledge is the answer. Until next time, I want to thank you all for tuning in with Demi Sanya, A Rich Education. Until next time, take care.